Good morning, our distinguished guests. Chairman of the Indonesia Investment Coordinating Board, His Excellency Mr. Mahendra Siregar. Indonesian Ambassador to the United States, His Excellency Mr. Dino Patijala. Head of U.S. Chamber of Commerce, Mr. Thomas J. Donahue. Managing Director of AmCham Indonesia, Mr. Andrew White. Managing Partner of Ernst & Young ASEAN Advisory Service, Giuseppe Nicolosi. Vice Rector of Paramadina University and Managing Director of Paramadina Public Policy Institute, Mr. Wijayanto Samirin. Senior Researcher from Faculty of Economics and Business Universitas Gadjah Mada, Mr. Insu Tidro. Distinguished representative of ministries, honored guests, and our media friends. Welcome to the launch of a report entitled Partners in Prosperity, U.S. Investment in Indonesia. This report is commissioned by AmCham Indonesia, the U.S. Chamber of Commerce, and the USAID Indonesia. This report will provide new insights on the size, nature, and benefits of U.S. investment in Indonesia and the outlook for continued U.S. investment. This report was conducted by the study team from Ernst & Young Indonesia, Paramadina Public Policy Institute, and Gadjah Mada University. This event is also supported by Bloomberg TV Indonesia as our exclusive media partner. This morning agenda will be as follows. Opening speech by Head of U.S. Chamber of Commerce, Mr. Thomas J. Donahue. Remarks by Chairman of the Indonesia Investment Coordinating Board, His Excellency Mr. Mahendra Siregar. Panel discussion on the report entitled Partners in Prosperity, U.S. Investment in Indonesia, which will be followed by question and answer session and moderated by Managing Director of AmCham Indonesia, Mr. Andrew White. The event will be closed by Indonesian Ambassador to the United States, His Excellency Mr. Dino Patijala. We will have the head of U.S. Chamber of Commerce, Mr. Thomas J. Donahue, to give his opening remarks. Since assuming his position in '97, Mr. Thomas J. Donahue has built the chamber into a lobbying and political powerhouse with expanded influence across the globe. Mr. Donahue spearheaded the creation of the American Free Enterprise Dream Big campaign, a positive long-term program to defend, protect, and advance a free enterprise system based on individual initiative, hard work, and personal responsibility, operating with free trade, free capital markets, and reasonable taxes and regulation. Let us welcome Mr. Thomas J. Donahue to come to the stage to give his opening remarks.
Thank you very much. Good morning, ladies and gentlemen. I'm very pleased to be here with such a distinguished group representing the business community and government. I would like to thank you, Mr. Chairman, for your hospitality and the extraordinary exchange that we had the occasion to enjoy this morning. Mr. Ambassador, we're sort of sorry you're going home. But you look happy, and you've done a wonderful job. We know you'll be in Washington for a few more months, and we look forward to following up on this excellent visit when we get home. I'd also like to recognize Andrew White of the AmCham Indonesia, our partner in the study. But before I say more about that, let me begin by expressing how pleased I am to be back in Indonesia. I've been here on a number of occasions. I've enjoyed visiting our friends and learning more about your country, and I will talk about that some in my brief comments. This is clearly an exciting time for Indonesia. It's a growing economic powerhouse in Southeast Asia and a pillar for regional security, with a young and vibrant population and an expanding middle class, otherwise interpreted by people as an excellent market. In fact, 60 million Indonesians are projected to move up into the middle class in the next 10 years. As the host of this year's APEC conference, Indonesia will soon fill the international spotlight as one of the largest economies in the region and one of the largest populations in the globe. This is the world's third largest democracy. The nation has a lot to be proud of. So I look forward, as many of you do, to attending the APEC meetings in a few days, as does President Obama, who is involved in some very exciting issues at home and abroad, but has reconfirmed his intention to be here. As you know, he spent some amount of time here as a boy. This is also an exciting time for the friendship between our two countries, which is growing stronger every day. 3 short years ago, we launched the groundbreaking comprehensive partnership to further evaluate and press forward our bilateral relations by enhancing cooperation and upgrading strategic consultations on key bilateral, regional, and global issues. And that partnership today is paying dividends, some that we can talk about and some that we don't, because it is a partnership based on economics, but also based on regional security. The benefits of U.S. investment are clear to all of us. One of the linchpins of our friendship has been our commercial relationship. Today, it's my pleasure to unveil with others a new report focusing on one important aspect of that relationship. Make sure you understand, this is one aspect. We have a multi-dimensional relationship. This is the economic aspect. We really are excited about this study. And a lot of credit goes to the universities and to our contractor, but the real, and to our financiers, but the real credit goes to the countries and the companies that are investing with one another. It's a groundbreaking study that fully outlines the benefits of U.S. investment to the Indonesian people and what it will take to ensure that that investment continues and expands in the years ahead. The study was based on a broad-based analysis of the data, but also serious interviews with senior executives from 35 U.S. companies with direct investments in Indonesia. I was saying today at breakfast, where you get your next dollar is where you got your best chance, is where you got your last dollar. And so talking to the 35 companies that are already invested here, as well as looking over the data, it really gives us a good sense of where we are. And I told you who did the study, but I want to say again, I really appreciate USAID for the help and giving it not only some resources, but a great deal of credibility. I think you're going to find the results of the study surprising. I did. So let me mention a few highlights. On the basis of our interviews alone, we concluded conservatively that from 2004 to 2012, the United States invested $65 billion in Indonesia, making America potentially the largest investor in the country over that time. So you've got 9 years, $7 billion a year on a straight line basis, and that's a lot of money. This contrasts sharply with most published data that suggests the United States is the 4th largest investor in the country. Guess nobody went to talk to the companies, because some investments, U.S. investments, may be made through local corporations that they own or other ways. So we went and actually said, where'd the money go? And who got it? And what we learned was very, very important. In the next 3 to 5 years, this study said, now this, if you don't listen to anything else, listen to this, that U.S. companies planned an additional $61 billion worth of investment in Indonesia, and that's today. So if you look at that, that's more than 20 billion a year, up from 7 billion a year. An amount that will be critical in helping the government achieve its growth and investment targets and helping the companies expand their activity to meet the demands of a growing market. In terms of employment, our study found that just the U.S. companies we surveyed directly employ approximately 183,000 Indonesians at competitive wages. Indirectly, U.S. companies supported more than 1.7 million Indonesian jobs from 2007 and 2012, and that's the ones they know about. Because the more you drive the economy, the more you have investment activity moving, the more collateral jobs that are created in a society. This study also shows that American investment is benefiting the Indonesian economy in ways that transcend the simple dollar figures. U.S. companies are boosting local productivity, investing in their employees, and making significant long-term contributions to the communities in which they operate. The study clearly demonstrates that American companies are committed to investing here. However, they have identified, and you wouldn't be surprised by this, a number of challenges that may pose to be barriers in investing, multiplying that investing going forward. These challenges fall into three categories. Regulations, you're going to think I'm talking about the United States here. Regulations, infrastructure, and human talent. The regulations are simple. Governments always feel a need to regulate to protect the common good. The regulations that are problems are ones that are redundant and keep stacking one on top of the other, and regulations that may be in place to protect domestic markets from competition from abroad. Still, I'm talking about the United States. Then the question of infrastructure. You know, wasn't many years ago the United States felt that they had one of the great infrastructures in the world. But if you don't keep it up, if you don't expand it to support a growing economy and a growing population and an expanding middle class, if you don't expand it to support energy development and to support the movement of goods, the supply chain operations in each of our countries need constant updating to be able to support a growing economy. And then, of course, is the issue of human talent. If you have it, you are attractive and successful. If you don't have it, it's a real problem being competitive. In the United States, for example, that means we have to continue to improve our K through 12 education system. And if we do nothing else between now and the end of the year, we need to pass an immigration bill that lets us attract the high-end people that are educated in our universities, for example, and the workers that we need that are the base and core of our economy that we need to be able to bring back and forth as they're needed for work in our economy and on a seasonal basis as well. I am hopeful that we will get that done. Now, let me explain up front that I say these very same things at home in a most aggressive way. But I say them to you and I say them to Indonesia because there are lots of people in lots of countries around the world improving their ability to attract American investment. So I suggest that Indonesia get first online. And the best way to get there is to look at these competitive issues. In fact, as I said, we face our own challenges at home. And doing these kinds of studies, encouraging investment, really helps us press our own government and our own companies to continue to move forward. As I said, it's a highly competitive global economy. Investors have to make tough choices. Where they're going to put their money where they're going to put their investors' money. And Indonesia has a great chance, I think, to move forward. I'm going to give you 3 or 4 or 5 things you might do. But I want to say that the Indonesian economy is now going to attract investment, and it's not just on commodities or on the traditional investments, but as the population grows and as the consumers grow, and sophisticated consumers, you're going to be able to attract money for healthcare investment and for communications and high tech. And by the way, food and clothing. It's a funny thing that happens that in societies, as people build up their appetites for higher end products, is a great attraction for investment. As a matter of fact, I told the chairman this morning that my wife and some other colleagues are traveling around your community today, so you might expect some economic growth that will be noted in the numbers for this week. All right, now back to the reality for just a minute or two of what you really need to do to become more competitive. We all agree there's too much regulatory uncertainty. At our breakfast this morning, one of the American companies said, if we knew what we were going to look at for a 5-year period of time and how the rules would be, and that we wouldn't have abrupt changes in regulation and gaps in implementation and enforcement, we'd spend more money right now. Although Indonesia continues, as I said, to move forward with reforms, these efforts have not yet created a level playing field for foreign investors to establish clear and transparent rules for all the actors, domestic and foreign investors. In addition, decentralization has introduced another layer of bureaucracy for firms to navigate, resulting in costly red tape. Remember I said there's a lot of similarity between the U.S. and Indonesia? We have 50 states, and they're all trying to build their own bureaucracy. And some of you that invest in the United States understand this problem. Second, I think there is, as we mentioned, a lack of infrastructure to support this growing, expanding economy. Indonesia is seen as less competitive than other Southeast Asian nations in terms of logistics and infrastructure. Ports, roads, railways are still underdeveloped, and there are concerns about insufficient government spending on infrastructure. Sounds like I'm home. Same problem in the U.S. Third, there continues to be a shortage of skilled and educated workers. We've talked about that. The limited number of academic institutions and qualified teachers with an exploding population or a demand for education is challenging. And significant efforts are required to improve the quality and productivity of the Indonesian workforce. They want to work. The study makes a number of common sense recommendations in each of these areas, recommendations that often apply, as I said, to both of our countries, and I hope we can discuss them in more depth during the panel session. So let me conclude, having used more of your time than I think the organizers assumed. It's been said that capital goes where it is welcome, where it is safe, and where it has a good chance to profit and grow. And there's no question among American companies that Indonesia's economy holds enormous potential. Our companies are eager to deepen their partnership with Indonesia. However, growth in the United States investment cannot be taken for granted because of all the competitors. The respondents in our study were clear in wanting to see consistent policies, long-term commitment to infrastructure development, and an improvement in education. The U.S. Chamber and our AmCham, which by the way is doing very well, would like to continue to be partnered in that progress and partners in our mutual prosperity. With some common sense reforms, Indonesia can remain a beacon of investment, not only for the United States, but for the rest of the world. And I noticed that the president of China stopped by for a few days on his way to Bali, and I understand he plans to make some investments. Well, you know, it gets contagious. If we're making them, maybe they're making them. If they're making them, maybe we're making them. And you need to take advantage of that. I just want to say thank you very much. I want to finally thank and encourage the people that came together to do the study. We all learned something. We all got a path for the future, and we all started to look at a series of numbers that would really be exciting. Now all we have to do is stop talking about it and do it. Thank you very much.
Thank you, Mr. Thomas J. Donahue, for the opening remarks. We are honored today to have the newly appointed Chairman of the Indonesia Investment Coordinating Board with us. We would like to invite His Excellency Mr. Mahendra Siregar to come to the stage to give his remarks.
Very good morning to everybody. And first of all, I would like to greet my very good friend, Excellency Ambassador Dino Patijala, for his gracious time, not only for being here with us today, but I would not be too surprised if his influence and his role behind the screen in delivering the study is very prominent. But let us make sure that such kind of contribution continue. Tom Donahue, the President of the U.S. Chamber of Commerce, and the delegation from the U.S. Chamber of Commerce, and of course Andrew White from AmCham, that have been very instrumental in producing this report, and especially USAID, and of course Paramadina University, and I understand there are a couple of other institutions behind this report and survey. I thank you very much for such a report. I haven't read the whole complete report, but I've read at least the summary, which is of course very informative, and for me it's also educational. There are some issues that I would like to highlight on this report, which would be very relevant in my task as the chair of the investment board. The first one is, of course, especially for our media friends, we are always looking for the figure. And I thank Tom and Andrew very much. We can get this figure. I appreciate the hard work in getting this, and probably the pressure that you have to do to get this in the way highlighted. In two issues. One, of course, the past 9 years figure of totaling $65 billion investment of the U.S. companies in Indonesia. But what is equally, if not more, interesting as well as challenging is the next 3 to 5 years figure of potential investment by these companies. This is interesting because the figure mentioned here is 61 billion US dollars. So if you divide it by 3, it's about $20 billion a year, which is actually already close to the gap of 50% of my target. And as Tom indicated earlier, later today, I will also accompany the President of Indonesia as well as Chinese President in witnessing a series of arrangements and contracts to be signed between the two sides of Indonesia companies and the Chinese side. And if you look at their figure, then I know where to find the other 50%. So my job is actually just to build or establish a task force in the board to ensure that they will really invest the plan and they really follow suit their promise. And of course, in exchange, we will make sure that they will do it. If that happens, then I can do many other things, because I've done my whole annual target by focusing on these two companies' origins only, because it covers the whole, which I, up to yesterday, still think too ambitious. But today, after looking these two different figures, maybe it's too modest. But let me suspend my judgment until the time I need to disclose the next year target. But another interesting feature of the study is, of course, the 183 employees that could be in a way facilitated by this investment. And of course, I would be ensure that most of them, if not all, are Indonesian nationals. What I want to say about this is not only, it's a big figure in itself, 183,000 people. But if you go to the list of the American companies, then we talk about high quality investment, which equals to high quality, semi and high skilled workers of Indonesia. That is what we want to do going forward. It's not only the figure that matters in terms of the value of the investment. It's the quality of the investment itself. Because what I think is important for Indonesia going forward, which is slightly different from Indonesia in the past, is that we would prefer high quality investment to be investing in Indonesia, because it would bring good results for the companies, but at the same time, for the semi and high skilled workers, at the same time for the government, because these companies abide and comply with tax regulations, which I'm still familiar because of my previous responsibility, and comply with the environmental standard, and of course very much comply with the social and local values and objectives. So this is the kind of investment we would like to see. And without saying too obviously, this is the high value added investment along the higher value chain of industry. That's what makes the difference between the future focus and what we have up to date. Because Indonesia today is Indonesia that would like to continue growing at a respectable rate, but at the same time sustainably. So with that, let me now focus on the policy recommendations, because this is the most relevant part to my work. Because if I focus too much on the good parts, then I feel too complacent and then I will not do my homework. So let me focus on the policy considerations by the report. Now, it is divided into three parts: regulatory uncertainty, infrastructure, and human capital. Let me respond to some of the points mentioned here by the report. On the regulatory uncertainty, at least we have already put in place three elements that will tackle these issues. One, on the simplification of investment procedure. It is an ongoing work, and I will ensure that the already improved start-up business and whole process of the licensing will continue. Within our own office, the integrated one-row system licensing procedure has been reduced to 3 days from many more days required in the past. But I will see whether, in addition to an accelerated time, we could also provide a reliable online system. So that would provide less necessary for face-to-face interaction. The second sub-item of policy consideration is engaging civil society and the business community in the policy-making process. Yes, absolutely. We will make sure that this recommendation will be followed up. Not only, of course, up to now, we have a very strong and reliable so-called committee on investment within the investment board. But going forward, I would like to see that this policy investment committee is broadened up. Not only in a way having the businessmen representatives as members, but other stakeholders. We are thinking of possibilities of the civil society being involved, and also our link to the local government representation. Because otherwise, we might focus too much on the startup side, on the beginning side, and then we don't facilitate enough in the implementation and the operational side, which I think is even a bigger concern in the more competitive world. The other one is still within the policy consideration, as the point regarding strengthening the role of Ministry of Home Affairs and provincial governments. Well, as some of you might know, this is my second day, and I'm happy this event could start really on time at military time 1000 hours according to the invitation and plan. And that's good. For you, or some of you, this might be your first event. For me, for better or worse, this is my third meeting, unfortunately. But that shows you the dynamic of Indonesian economy and the demand for us to respond accordingly. Now, with regard to the home affairs, we are going to travel to Bali in the coming days for attending the APEC series of meetings. And we, within the investment board, have invited all local investment board chief to be there, and we will have the coordinating meeting right away. And the message is very clear, that all the regulations and policies that they are issuing have to be in line with the ones that we are going to pursue further, which basically following the reform agenda. Among others is the issue of wage remuneration. This is something we would like to see our local investment board providing some advice and ideas to the local governments, leaders, in how they should, in a way, provide decisions with regard to this. I will go a little bit detail about this afterward. Now, on the infrastructure, this report suggesting that we had in the past, during the previous era, the 30% of the budget allocated for national infrastructure, and now in 2012 only 10% was allocated. Let me report to you, for the 2014 budget, it would be close to 15% of the budget of the well, this time I could not take the credit because I'm no longer part of the Ministry of Finance, but I will convey your applaud to the Minister. The 15% budget for infrastructure. And, of course, we want to see that increase to 20%, but within the sustainable fiscal policy. Otherwise, then we will have the complication of the issue of public debt and fiscal sustainability. And on the issue on land acquisition law, yes, absolutely. This is number one challenge for many of infrastructure projects development. And I understand and am well aware about this, and we are looking into how to improve the effectiveness of the regulation. The law is there, the presidential decree is there, it's more about the execution. And again, its consistency and effectiveness at the local level. On the PPP's issue, I would like to report to you, we have progressed quite well in the last 8 to 12 months. And we are going to push this further, not only within Indonesia, but in collaboration with many other countries and institutions. In fact, we expect within the APEC summit next week in Bali, Indonesia's PPP Center will become the pilot within the APEC region to be presented as a model for the region going forward in facilitating and focusing and prioritizing infrastructure development, including through PPP scheme. Now, the third and probably the most important part of the policy consideration is the human capital. On this, I will report to you first what we are going to do with the minimum wage or remuneration. Up to now, of course, this is something that many of officials tend to not confront the issue directly. But this is very relevant to the overall investment climate improvement. And on this matter, let me report to you, Indonesia as a young and a growing demographic society has the potential to expand the discussion of minimum wage with other issues as a package. Next year, Indonesia will implement probably the flexible interpretation or definition as universal healthcare. But on this case, please don't associate with other countries, because then you might be more skeptical listening to this. But put in the context where this is a society where more than 50% of the population is still under 30, so it's a very vibrant and very low dependency ratio. This is the best time to implement such policy, because it could become sustainable in the long period of time. And please be assured, this is going to be implemented by the government that have been disciplined in implementing the sustainable fiscal policy. So if we have the health insurance issue, and the following year, in 2015, we will also implement the other series of social security, that is the pension plan and the retirement related or old age scheme, as well as other related to what we now say as the workers related insurance. So we have the health insurance issue covered nationally, and the health insurance, the workers related insurance covered also nationally, then the issue of minimum wage is not longer going to be the single source of income of the workers. And we hope by having that much broader discussion, we would come up with more rational consideration within the discussion of the wage itself. So it is not about to be or not to be anymore for the workers. It's more about how we can align all of these three packages all together. That would be the idea going forward. And we have already had the presidential decree on the guidance of how the local governments should decide on the minimum wage. And this is where I said earlier, I want to see all local investment board chair ensuring that it will be implemented consistently. And I will also base my evaluation and assessment and report card of these people, among others, based on that issue, as well as other issues related to regulatory consistency. On the issue of the link to education to business needs, this is what I expect would get a lot of support from US companies. This is where I think US companies should and could become the pilot and the role model. Because you have been implementing this, of course, for many years, many decades in the US and elsewhere. And this is where I think we have to do the same here. And for that matter, as well as other related matters that I have described earlier, I have suggested to Tom earlier this morning, what if we form something concrete to be able to monitor and to ensure that all of these commitments are followed up. We have some ideas, and we will report to you later on how this could turn out as soon as possible. So that would be my response to this report. And again, I welcome and thank very much all the parties that have been contributing to the finalization of this report. And I hope next year, when we gather again, we are not going to discuss another report similar to this, but would be more about the report of how this being implemented consistently. Thank you very much.
Thank you, His Excellency Chairman Mr. Mahendra Siregar. We will now have a panel discussion, and I would like to introduce our moderator for today, the Managing Director of AmCham Indonesia, Mr. Andrew White. As Managing Director at AmCham Indonesia, Mr. White directs policy, government advocacy, public affairs, communications, and stakeholder outreach on behalf of AmCham's Indonesia's approximately 600 members. Mr. White is a public affairs, media, and government relations specialist and previously worked at Philip Morris International in various senior corporate affairs positions. Mr. White received his BA from Connecticut College and his MBA from the University of Connecticut School of Business.
Thank you, Maria. Chairman of the Indonesian Investment Coordinating Board, His Excellency Mahendra Siregar. Indonesian Ambassador to the United States, His Excellency Dr. Dino Pati Jalal. It's great to see you here. Thank you for coming all the way from the States. Tom Donahue, President and CEO of the U.S. Chamber of Commerce. Distinguished representatives of various ministries, honored guests, and our media friends. A lot's been said about this report. And so I won't say much. I will get to the star of the show, which is going to be the report itself. But I will say this, when I first joined the AmCham Indonesia 2 years ago, and I began talking to individual companies, I quickly began to realize that the story of U.S. investment here in Indonesia had to be told. That the published data really didn't reflect the true level of investment. And as you know, many American iconic companies have been invested in Indonesia for decades, and some going back almost 100 years. Companies like 3M, Chevron Indonesia, Citibank, Dow, Eastman, PT Freeport Indonesia, GE, HP, Johnson & Johnson, Philip Morris International through its acquisition of AmCham Samporna, and I could spend the next 20 or 30 minutes just listing the companies. But when we first began considering this report, it seemed very daunting to do it. How do you do this? How do you aggregate the data from all the various companies and combine that with the published data? And one of the particular challenges which Tom alluded to earlier is that for most U.S. multinationals today, when they make an investment in Indonesia, they make that investment through their subsidiary. It could be located in Singapore or Europe or anywhere in the world. So how to gather that data? That was the challenge. And so what we realized what we needed to do is we needed to take the published data, but we also needed to speak individually with the companies. And what we needed to do is we needed to get from those companies their data. And that raised another challenge, because companies are reluctant naturally to supply that confidential data. So what we did was we, working with U.S. Chamber and USAID, we went and reached out to Ernst & Young Indonesia. Now Ernst & Young is one of the great accounting and consulting firms in the world. They audit most of the companies, or a fair portion already here in Indonesia. So they have the relationship with the firms. And then we needed to, once we had this data, we needed to get the best economic team possible that could make sure this data was credible, that it was accurate, and also understood the unique attributes of Indonesia. So we selected the best economic team from the best university in the world, Gajah Mada University, and we brought them to the party as well. And finally, we realized, and it's been said, so I won't say it too much more, the policy environment influences the investment environment. And so what we needed to do was to go to the Indonesian experts. And we needed to find out from them. And we needed to put them in front of the companies as well and get the feedback and come out with the policy recommendations, which Chairman Mahendra has just highlighted. And so there again, we found the best policy team at Medina Public Policy Institute. Now that the study's been completed, one thing is certain. Both the amount and the impact of American investment in Indonesia have in the past been greatly underestimated. And this study clearly demonstrates that American investment in Indonesia is and will continue to help to drive the economy. But as you'll also hear, and you've heard from Chairman Mahendra, you've heard from Tom, and you'll hear from Medina Public Policy Institute, this potential is tempered by investor concerns about the existing barriers, including rule of law issues, regulatory unclarity, lack of sufficient infrastructure, and shortage of skilled labor. Now, as the participants in the study made clear, these barriers need to be urgently addressed for Indonesia to fully realize its full potential. And we're confident they will be, and even more confident by the new chairman of the comments that he's provided to us today. I think we all take a lot of comfort in that. I'd now like to call up to the stage Giuseppe Nicolosi, the Regional Managing Partner of Ernst & Young. Giuseppe is the lead manager of the study, and he's going to present some key highlights. Giuseppe.
Good morning, everyone. My job has been made very, very easy because most of the stuff that I need to tell you has been told. So, as you say, sometimes when you have to have an impactful comment and a statement, you say it again, and then in conclusion you say it again. So my job, as I said, has been made much easier. The study has been conducted by Ernst & Young, it was being commissioned by AmCham, as has been said earlier, and we worked very closely together with UGM, and we worked very closely together with Medina University, the Institute of Public Policy. The study is actually, it's not an easy study because it's not about published type of data that we looked at. We did primary research as well, we did secondary research in identifying what are the actual numbers behind what we see in the publicly available information, and what those numbers actually mean in actual fact. So the methodology we use, as I think Andrew mentioned earlier as well, was to actually not just to look at quantitative data, but we looked at both qualitative and quantitative data from interviews that we conducted with 35 different companies who have invested in Indonesia, who were agreeable to participate in the study. And there are many people that need to be thanked in this occasion. If I mention everybody, I think probably I will spend my allocated 10 minutes just mentioning names, and probably I will forget someone, so I'd better not say anybody, don't mention anybody. If I can have the first slide, please. Oh, here it is. Sorry, I was looking at that. So, as has been mentioned by Tom and others, the figure we came up with is that those 35 companies have actually invested $65 billion between 2004 and 2012. The figures you have heard may be different. We may have read different figures coming from the AmCham, coming from Bank Indonesia. And the reason that you hear different figures is not because those figures are wrong, but it's because the methodology that actually is used to collect those figures is different. So for instance, AmCham is more interested in actually understanding what is the initial investment of foreign companies into Indonesia. What they don't have a responsibility for licensing of oil and gas companies or banking institutions, financial service institutions. So that data is not contained in the figure that AmCham publishes. Bank Indonesia, on the other hand, is more interested in the broader economy, so they actually measure the inflow and outflow of foreign direct investments in Indonesia. But what they do actually measure the investment coming from a given country. So when the cash transaction happens, they actually evaluate that that investment comes from Belgium, Singapore, Russia, whatever it may be, no, Russia, no, Germany or whatever. But what is not considered is actually that investment comes from US companies that use subsidiary in other countries to actually make the transaction. And therefore that particular investment is recorded under German investment or under Singapore investment. In fact, if you look at the publicly available information, the major investor in Indonesia is Singapore. It's not true. It's companies that actually channel their funds through a Singapore vehicle rather than being an investment from Singaporean companies. So that's where the disconnect comes. So our collection data represents probably a true figure, a close figure to what the reality is. And we estimate it's actually undervalued as investment because we only interviewed 35 companies. AmCham has got 600 members today. So if you think about 600 different American companies, members of AmCham in Indonesia, which we have not talked with, the 65 billion may be a kind of a conservative figure that we estimated, but by and large we feel that comfortable with that figure, and therefore that's a figure that we are able to underwrite, if you will. The major areas of investment are primarily focusing on extractive industries and manufacturing. That's the data that we collected. And therefore, this by and large has been the two major sectors where US companies have invested. Other sectors invest also, but I'm saying as major investment. Now, if we look at what that means from a 65, next slide please. Yes, thank you. So if we look at what is the impact of $65 billion, we calculate that 94.1 billion increase in GDP between 2004 and 2012, and the creation of 1.74 million jobs in various sectors in Indonesia. These jobs are created not just by US companies, but created by companies that are part of the supply chain of US companies. So those jobs will not exist if US companies do not invest in Indonesia. So it's an important aspect to consider. 183,000 jobs are directly provided by US companies, but 1.74 million jobs is the direct impact on from the investment. In fact, the UGM has done a fantastic job in actually applying some, I have to read the social accounting metrics methodology. They've used a number of economic analysis to actually understand the numbers. And what we do know from that economic analysis is that for every national product output, there is, so for every dollar US invested, for every US dollar invested in Indonesia, there will be a $2.75 production output in Indonesia. So there is a multiplier impact for every dollar that US companies invest in Indonesia. If you look at national GDP, I'm giving the total figure, but for every dollar invested, there will be an additional GDP growth of $1.44 in relation to GDP growth. And for every $1 million invested in Indonesia, there is a creation of 20 jobs. So it's quite, the multiplier impact of foreign direct investment of US companies is quite dramatic. There are additional elements which may not be quantifiable, but it's quantifiable to a certain extent. But US companies also, next slide please. There is a secondary impact as well. So if you actually increase the state revenue, whether it's local government or national government, there is an opportunity for the government to invest more in infrastructure, education, health. So that dollar creates a multiplier impact as well. Transfer of knowledge. We know that US companies actually spend quite considerable amount of money in developing and training their employees. The training budget has increased by 150% by 2007 and 2012. In 5 years, there is 150% increase in training budget. That will create, as a kind of a secondary impact, if you will, the ability of people to actually develop their career, develop professionally, looking for more higher level jobs, and therefore, in turn, that creates greater wealth for the family and the ability of families to actually send children to school, to higher education, etc., etc. So over a period of time, the US investment will create a better society as well, contribute to create a better society for the people involved. High salary, we have calculated that US companies actually pay their employees an average of 4.4 million rupiah per month, which is much higher than the minimum wage, if you will. Once again, that creates for the people receiving that higher salary, create disposable income, so they can improve their social conditions, and they can also contribute to the economy in the community where they live because of their ability to spend and be more sophisticated consumers. Am I running out of time? Okay, next slide please. We look at corporate social responsibility, environmental protection, the ethical behavior, ethical business behavior that companies perform in this country as companies. And that's the kind of figures we have come up with. 5.8 million was spent in 2012 in various social type of activities to contribute, to give back to the community, to contribute to health, education, infrastructure, social welfare, etc. An increase of 95% between 2007 and 2012. So there is a commitment by the US companies to actually contribute to the betterment of the Indonesian society and the community where they operate, to give back to the community. They are committed to environmental protection. They are very much committed to environmental protection. There is a particular system that rates companies in Indonesia for their compliance to environmental laws, regulations, etc. And one company got the gold, which is very rare, the gold star kind of thing, the gold rating, which means it's kind of perfect. And then all the US companies we have interviewed have achieved green and blue, which is the minimum rating for companies that actually comply with local environmental regulations. Chevron, I am allowed to mention that Chevron achieved the gold proper rank, which is fantastic for an oil and gas company. Last but not least, the importance of ethical behavior. Again, US companies comply with FCPA rules, they comply with the UK Bribery Act, which actually is a contribution, if you will, to the government policy of combating corruption and reducing the level of corruption that over years historically has developed in Indonesia. That's not a secret to anybody. There is a clear report published on a regular basis, on an annual basis, about the corruption level in each country. And so that is also the behavior, the ethical behavior of US companies contribute to support the policy and the willingness of the government of Indonesia to actually combat corruption. There's been a mention of the future investment that companies are looking at in the next 5 years. There was a figure, we collected the total figure. We certainly are not disclosing any information for individual companies. It's a total figure of $61 billion US, that those 35 companies are actually planning to invest in Indonesia in the next 5 years. And the areas that they're actually investing in, it's not just extractive sector. Certainly that will remain an attractive sector because Indonesia is rich of natural resources. But there are also plans to invest in renewable energy, to invest in the manufacturing sector as the middle class of Indonesia grows. We know that in the next 20 years, most probably in Asia itself, there will be more than 3 billion new middle-class families coming into that social status, and Indonesia will be quite large. Being a young population, being very aggressive in the way they want to actually better their social situation, the middle class in Indonesia is growing very fast and will continue to place demands on the supply side. The agricultural sector, we know Indonesia is a little kind of behind in the way they use their land. It's more traditional type of agriculture with emerging technology and the input from companies who have technology to support a better, more efficient way of growing crops and growing products from the soil. I think there will be a fantastic opportunity for Indonesia to actually become probably the food supplier for the world. Now, there are two major issues in the world. One is energy security and food security. Indonesia could play a fantastic role in the world to become the food supplier. 61 billion I've already mentioned from the 35 companies, and I think I've come to an end, and that's my speech. Thanks, everyone.
Thank you very much. You said great work on the study. I'd now like to call up Pak Wija. He is the co-founder and managing director of Paramedina Public Policy Institute, and he is the man when it comes to advising us and certainly our companies in terms of how to navigate the regulatory environment. And he has some clear recommendations that came from his discussions with the companies and from their own policy considerations. Pak Wija.
Andrew, thanks for the introduction and also for inviting Paramedina Public Policy to participate. It is very historical research. Why it is historical? Because in the past, discussion on FDI has been done many times. But the discussion is lack of number, fact. The discussion always about it is good, it is bad, it is creating job. And so what if it is good? So what if it is bad? This research gives us the ability to state clearly that it creates millions of jobs. It creates 100,000 of jobs. It creates 1.4 GDP multiplier effect. It creates 1.7 output multiplier impact. I think in this regard, I would like to say thank you for inviting us to participate in this very important research. Ladies and gentlemen, 6 months ago, IMF, World Bank, ADB predict that Indonesian economy will grow by 6.3% this year. And then just recently, they revised the forecast into 5.3. I think it shows us a few things, that we are in a very dynamic economic situation, that Indonesia's economic growth is in a declining pattern. We are far from being entering a crisis, but declining, yes. It has happened at a time when Indonesia needs high GDP growth to create more jobs, to alleviate people from poverty, and so on and so forth. We cannot expect consumption to provide support because inflation eroded people purchasing power. We cannot expect government spending because tax revenue decreased, again because of the increasing business activity. Net export we cannot expect because we experience a decrease in export. 6 major commodities that dominate our export experience a decrease in price of around 7%. And oil that account for the majority of our import. On the other way around, the price increased by 8%. So net export we cannot expect. It will help us this year, even next year. Now there is one factors, an outlier factors with this investment that continue to grow. Next slide, please. And I think it is not too far if I would mention it is probably the savior of our economy. This chart explained to us that from 2004 until 2009, in average, if we use BKPM number, FDI to Indonesia, in average, 8.8 billion US dollar per year. And then after 2009, after the global economic crisis, the number almost doubled to 17.6 billion US dollar per year. What about this year? Amazingly, if you take a look at the first half of this year, the number is already 13. So by end of this year, we can expect the number will be as high as 25. So despite all of the decrease, this number keeps increasing. Now the challenge for us is how we can ensure that this growth continue. Will it increase, stagnate, or decrease? Let me analyze the reason why we receive this amount of FDI. Based on our analysis, before 2009, FDI came to Indonesia because mainly intrinsic factors. What is intrinsic factor? Factor that is in Indonesia. What's that? Natural resources, infrastructure, human capital, and regulation. But then, after the economic crisis in 2009, global economic crisis, a lot of money coming in. Because in addition to intrinsic factor, we have what's called by relative factors. People choose Indonesia relative to other countries. Now the question is, we see that the global economic recovery is, on its way. We can see it. And soon we'll lose the relative factors. We only have the intrinsic factors. We have to improve infrastructure, we have to improve human capital. We cannot improve our natural resources because it is given by God. But of course, the easiest way and the fastest way to improve is improving the regulatory framework. I think with that, we are optimistic that the FDI will increase this year and the next year to come. Next slide, please. Thanks to Pak Mahendra, he already explained all the policy recommendations, even in a much better way than I can do because he has the authority. But we would like to divide our policy consideration into 3 parts. The first is policy uncertainty, the second is infrastructure, and the third is human capital. On policy uncertainty, policy incoherence is a very serious problem in Indonesia. I would like to explain later on. Secondly, is the regulatory applicability. A lot of rules has been created, but cannot be done, cannot be implemented. That's an issue. Because if we don't comply with the rule, then we'll break the law. But if we comply the rule, then we cannot do business. That's an issue. The third, gap in service delivery. It's happened between central government and local government. And it's also happened between BKPM and another line ministries. Based on our survey, based on our interview with the 35 US companies, most of them has a very, very positive view about BKBM. But when it's come to dealing with by ministries and local government, problem arises. Abrupt change in policy. We are too innovative, too creative. Government cannot be so innovative and so creative because business will face problems that happen. The third, lack of regulatory clarity. It's create various disputes. We'll explain later on. Now, just to give you an example that can explain the issues on policy uncertainty. When we are talking about energy, actually we have a huge reserve of geothermal. The largest reserve in the world. Some studies say it's around 30%, 40% of the global reserve. But unfortunately, only around 3% has been exploited. 3%. It's at the time when we import a lot of oil. Let me compare with our neighbor, the Philippines. Their resource is much, much lower, but they have exploited 70% of the reserve. So why it's happened? To start with, to begin with, it is because regulatory incoherence. For example, when we take a look at geothermal law, geothermal considered as a mining. But then, if you take a look at forestry law, under the forestry law, mining is not allowed to have operation in conservation forest. And 99% or probably 100% of geothermal located in conservatory forest. This conflicting rule make Indonesia fail to take advantage of the opportunity that we have. And to make things complicated, to enable company to start the exploitation, they have to get approval from the local government. From the interest of local government, it is not in our interest. If they start exploitation now, the revenue will come 5 years, 6 years down the road. I will not be Bupati at the time. So I think the government have to change because it is very strategic that approval for things like this should be in the hand of the central government. We have a long list of examples to share with you, but I would like to give you just one more example. In regard to regulation clarity, according to our anti-monopoly law, any business are not allowed to have market share of 51% or above. 51%. A couple years ago, a company, because it's already become public information, I would like to mention the name, Carrefour acquired Alpha. The acquisition made Carrefour have market share of 57%. So problem arises. But then the issue is how you define market share. It is the market share of modern market or market share of the total retail market. So the law is not clear. So it's a great problem. After years, the problem resolved. But I think the cost is so enormous of uncertainty, time, energy, and so on and so forth. Now, what about infrastructure and human capital? Those two are very important because it will attract FDI that can bring Indonesia to overcome our main issue. What is that? Middle income trap. Right now, FDI came to Indonesia mainly those who are looking for natural resources. We call it natural resources seeker. Secondly, those who are looking for market seeker. Market seeker, it's good, but it makes our trade balance worse because usually they import raw material and they sell the product in Indonesia. What about natural resources? It's good. It create our trade balance positive. But it only employ minimum number of people. Actually, there's a third type of FDI investor that we actually really need. That's the efficiency seeker. those who operate in high-tech industry, those who produce computers, software, and so on and so forth. And for that to happen, just like what happened in India, in China, in Taiwan, in Malaysia in the past, they need infrastructure and human capital. And in these two aspects, we have serious concern. Infrastructure, our logistic cost is very high. It's accounted for around 20% of total GDP. So 20% of total GDP spent, around 20%. More than that, but around 20% on logistic. What if we can reallocate that into research and development? The impact will be enormous. Lack of reliable supply. If we visit hotels in various parts of Indonesia, we'll surprise because the hotel has electricity supply from the PLN, but also has genset, huge genset, because electricity, what's it called? Electricity, no, listrik mati itu apa? Blackout. How happen very often. So it raised the investment cost of various industries in Indonesia, not only hotel, but also many facilities like airport and so on and so forth. So availability is an issue, reliability also an issue. Human capital, low productivity level, low availability of qualified individual. Our survey gives us very interesting insight. For US company, they have no problem to recruit labor, blue-collar labor. We know the answer because they provide a very good salary, 4.4 million, way beyond the minimum labor wage. But what about the high caliber human capital for managerial level and above? They find difficulties. In this regard, we have to improve our human capital through education. We'll discuss that later on. Now, next slide. This slide is very important and very useful to depict why during Suharto era we are getting tired every day. Mr. Suharto open airport, open toll road, open various public infrastructure. We are getting tired of that because if you take a look at the state budget allocation, in the past 30% of the budget allocated for development. But gradually it's decreased after the political reform in 1998, and now it stays at around 10%. What's more problematic is often the budget is not fully spent. So, in average, over the last 5 years, there are around 11.4% of the budget on development is unspent because of various issues. On the other way around, budget on subsidies, always overspent by exactly almost the number 11%. Now, despite the increase in state budget, 36 trillion in nominal term in 1990, our budget now 1,658. If we use real number, in 1990, our state budget is 338 trillion rupiahs. Multiple by almost 5 times if you compare our budget right now. But allocation is an issue. It's not about the size of the budget, but it's about the misallocation. Next slide. Now, let's talk about the potential solution for our issues. For the policy uncertainty, we have various policy considerations. The first is simplify and reduce investment procedures. If you compare Indonesia, Malaysia, Singapore, Philippines, Thailand, in the rank of the ease of doing business index, we are lag behind. We have to improve a lot of things, but if we notice the rank very carefully, there is a strong correlation between the rank and number of procedures. If we cannot work efficiently, reduce the procedures. That will certainly help, and I don't think it's as tough as improving the human capacity and so on and so forth. Reduce the procedure. I'm very glad that Pak Mahendra very aware about that. Secondly, establishing investment dashboard. I don't want to cover the second and the third because Pak Mahendra already covered that. Establishing investment dashboard. What does it mean? The government has the NP2K to handle poverty issue in Indonesia. The NP2K is a team managed and led by the Vice President. The government also has a certain task force to handle bureaucratic reform. The team also led by the Vice President. In this regard, investment is as important as poverty alleviations and also as important as bureaucratic reform. I think Pak Mahendra need a bigger umbrella to reduce the regulatory incoherency, to deal with other ministries, to deal with local government and so on and so forth. And this should be under the coordination of at least coordinating ministry or Vice President. That's another idea. Infrastructure, increase government spending, we have discussed that, improve the implementation of land acquisition law. This is interesting because our law has been ratified and it is a very good, very helpful actually. But again, the implementation. Based on the law, if there is a project and need land acquisition, then the seller has to deliver an overprice and the buyer also have to mention their price. If there is no conclusion, both have to appoint independent appraiser. If there is no conclusion, there is someone who can decide. But the decision never happened. Human capital, strengthen the link between business and academic institution. I'm in university business. I realized that university is very good in teaching theory, but we are very bad in teaching soft skill. That's why there is a gap between the demand of the business and the supply from the university. Internship is a reality in Indonesia, in the US, everybody do internship. I think we need to adopt that culture in Indonesia. Encourage vocational study and so on and so forth, promote access to education for all, and so on and so forth. I think that's the last slide. I would like to end my presentation by reading. I read something very simple before I come to this stage. In my view, FDI is like a wild horse in the ancient time, like a wild horse. If we could manage it well, we can take a huge advantage. But if not, the horse could kick us and hurt us. The history tells us that horse play important role, and it is became the bedrock of civilization advancement. And now the wild horse is FDI. If our civilization would like to advance further, then we need FDI. FDI will play a similar role today and in the future. With that, I end my presentation. Again, thank you very much for the attention.
Thank you, Pak Wija. We do have a few minutes for Q&A before Ambassador Jalal closes us out. But Tom, if I could ask you to come up on the stage. There's one question I want to ask if no one else has asked of you before you open it up. So Tom, let's start with you. The $1 million. Oh yeah, we'll give you a microphone. The $1 million question then is, what's happening in the U.S.? What can we expect in the next day, month?
Well, I don't know, that's why I'm here. No, I mean, I think it's a very good question. First, a couple of facts. This is an argument about what we're going to do in our annual budget. And it doesn't have anything to do with the numbers, it's all about politics. And it's about politics that are leading up to the 2014 and 2016 election, and everybody's trying to position themselves. It's more complicated because there is some division within the Republican Party, but it's a division over some sensible arguments on which way we're going to go and how we're going to fix our problem. Point number 2, the United States has closed part of its government 17 times in the last 30 years, and nobody noticed. Most of the time it was for a few days. Once it went 20 days. Point number 3, I believe this will take a little longer time, not more than the outside 20, unless the pressure builds up and folks make a deal, because about November the 17th, we're going to have to deal with our debt, and that is to up the debt level that is approved by the Congress of the United States for the Treasury to buy or to acquire bonds, to sell bonds and other instruments to fund our government and our deficits. So what normally would happen in a couple of days, we'd have all the screaming and hollering and carrying on in the press and the political. And by the way, this is wholesome, you understand. A lot of people think, even in the United States, they laugh. It is the definition, the articulation of a free and open political process where people are not forced to move on issues that they think are inappropriate unless they can marshal enough votes in the necessary places to move it forward. It's a republic, but it's a democratic process. I do think that this could stretch out till we deal with the debt issue and the spending issue, and I'll leave you with one last thought. All of these arguments, all of these discussions, leave out of the consideration the elephant in the room. The elephant in our room are entitlements. The payments for health care, for Medicare, and Medicaid, and for Social Security. We are an aging population. By the way, I vote for that. But we're an aging population, and we can fix this, but we can't keep putting it off, beating it off, and everybody wants to put it off. It's part of the political process. Here's what I do. I watch this. I understand it's not going the way we'd like it to go. It will go there, but nobody should make a mistake that this, even if it's ugly as it's going to be, that it is going to force America to a position other than where we wish to be. Because as Winston Churchill said, after we try everything else that usually doesn't work, we come to something that does. Thank you very much.
We have time for only a few questions from the audience. So what I would ask is we have microphones around the room. If you would raise your hand, I'll call on you. If you wait for the microphone, and if you could state your name and your affiliation, and if I could ask you to keep the question brief. Thank you.
Thank you very much. My name is Johannes Nasiholan from South Sumatra government. I am the chairman of Regional Development Planning Board of the province. In fact, I am aware that most of smart people in the grassroots, not in the national level, say that actually Indonesia does not belong to Indonesia anymore. When we look at the sky, we look at Airbus, Boeing, Fokker. When we look at the land, we look the Far East capital like Toyota, Suzuki, Hyundai, whatsoever. And we look at the forest, agriculture. We look at the same, look like Indonesia, but actually they are Malaysia, Singapore, or else. And if we look at the mining, we look at Western, either United States, Canada, Europe. So the question is, where is Indonesia? So my question is, when I look at the board, the Partners in Prosperity, U.S. investment in Indonesia, can you give us advice? How can you, through the investment, can strengthen the capacity building within the government, especially in the local government. Of course, the discussion will be quite long regarding the three things that has a challenge for us, like regulation, human capital, and so forth. But as a regional planner, listening of all of the presentation, this comes to my mind. How can we smartly bring U.S. investment to my region, but by that also strengthen the capacity building within my government. Thank you.
Perhaps each of us can weigh in on that, but maybe I could start with each of you perspective, from Indonesia. Tommy, if you could give your perspective on what's not like.
Thank you, Pak. I think that's a very interesting question. In our report, we also put data that despite the impact, the positive impact of FDI, more than 50% of Indonesians see, FDI cautiously. Why is that? I think in part because of communication issue. And secondly, I think in part because as Indonesian, we fail to take advantage from the opportunity that is brought by FDI. For example, transfer of technology, human capital enhancement, and so on and so forth. This thing happened in China. This thing happened to some extent in Malaysia. This thing happened in Taiwan. But why does not happen in Indonesia? I don't think the company that invest in Indonesia and in those countries are different. They are similar, they have the same culture, they came from the same countries. So I think it is on our hand to ensure that FDI also benefiting us optimally. How to do that? We have to step up the ladder. We have to attract FDI who seek for efficiency. In the past, we have software industry, we have chip industry, we have computer design industry in the past. But where they are right now, they're moved to our neighbor, China, Malaysia, and to some extent Vietnam. Why is that? Because we cannot maintain this competitiveness, this efficiency. That's my very short answer. But of course, I'll be more than happy to have a very long discussion with you as well, a lot of things to share with you as well. Thank you.
Well, today on the New York Stock Exchange, which is now the New York European Stock Exchange, of the 100 largest American companies on that exchange 100 years ago, there's only, I think, 8 left by name. They have merged, moved, changed as they've begun to operate at home and abroad. We say at the Chamber that 95% of the people that American companies want to sell something to don't live in the United States. They live all around the world. We now have a global market with global companies with different names than we had before. But all of those companies, all of those providers of investment and product are dependent on one thing. They're dependent on markets. They're dependent on people and markets who are going to contribute to their innovation, buy their products, demand their services, and participate in the community that they work and invest in. When you wake up 3, 4, 5 years ago, it's going to look different than it does today. Because not only are we making a lot of change, we're making it with great speed. New trade agreements, new investment relationships, new new technologies, new ways of communicating. And so Indonesia is going not only to be different than it is today, but it is going to be part of all those companies, all those investments, all those technologies, and all of those trading agreements, because that's the way to the future. You will still have individual proud countries with indigenous folks, although more and more immigration who seek to make Indonesia their home and their place to raise their families and to have their lives, but they will do it in an integrated way with companies, products, services, solutions, and conflicts from all over the world.
Just a quick comment. I think it's an excellent question, by the way. I think there is an important aspect of capability buildings in building in a community that is of critical importance for companies to succeed. It's not about generosity, it's about having alliances and partnerships with the local companies or local individuals to actually succeed. So what we've seen today is that there is an extension of the supply chain, if you will. If you have an investment in any country, not just Indonesia, around that investment, new companies, new entrepreneurs are created because they will see the opportunity and they will develop the supply chain in that community. So that is already a level of capability buildings. If you then look at the level of knowledge transfer, technology transfer, training and development of individuals. Now, if you ask any bankers in Indonesia where they actually had the training, most of them are Citibank, HSBC. So that capability building is of critical importance to actually build a local society and contribute to the development of local entrepreneurs to actually be more successful in developing a growth economy. Entrepreneurs are the drivers of the economic growth of any country. And that's important that Indonesia will focus on that as well. At the moment, if you look at the number of entrepreneurs, now the percentage of the population, I think it's 0.4%, if I'm not mistaken, if I recollect correctly. In the US, for instance, it's about 4 or 5% of the population. In other parts of the world, it's much higher than 0.4%. So increasing the investment in developing entrepreneurial type of spirit in the country will go a long way to actually build communities and build capabilities within the communities.
That's a great answer.
Look, I want to stick with what Dr. Mahendra said, which was military precision, and not go off the rails just because he's left the room. So I'm going to have to end the Q&A session right now. These gentlemen will be around after. We do have a lunch that's served, and I want to give the floor over to Ambassador Dino Jalal. Thank you very much.
Thank you, Mr. Andrew White and the entire panelists for the insightful discussion. Now I would like to invite the Indonesian Ambassador to the United States, His Excellency Mr. Dino Patijalal, to give the closing remarks.
Said anything yet. Look, thank you everybody, and this is actually I learned quite a lot in the last 2 hours or so, and I want to congratulate BKPM, AmCham, Paramadina, US Aid, UGM, Ernst & Young, everybody, I don't know if I leave anyone out in preparing this excellent report. You know, to be honest, if me as ambassador, if I were to come here and say that U.S. investment in Indonesia is 65 billion instead of 7 billion, which is our official line, you know, I'd probably be put in mental institution. But if this is the result of an extensive and detailed and scientific, systematic study by a number of groups within Indonesia and outside Indonesia, then it makes a big difference. I think it's tremendous news that the number is a lot higher than 7 billion, and I think the other best news is that we can expect another 61 billion or so to come in the coming years. So I think that's very good news for us. Again, I want to congratulate all those who have prepared the report, and we look forward to working with you on that. I want to remind everybody, especially my Indonesian friends, that this 61 billion coming is not guaranteed, it's not preordained, it's a business plan, it's an intention, and it is very important for us, first, that we keep foreign investors, including American investors, happy, right? And when we keep them happy, what that means is that more will come. Because if more investors will come to Indonesia, what do they do? They ask investors who are already in the country, hey, are you happy or not? Right? And I want Indonesians to know that when we make investors happy, it doesn't mean selling out. You know, it is actually part of our national ethos. You know, Indonesian families have to be nice to foreign guests, to any guest that come to our house. And if we have a store, a shop, it is obligatory for us to treat our customers nice and to make them happy. Yeah, so it's not selling out. You know, we need and we're obliged to keep investors happy and remain in Indonesia, so more investors can come in and be attracted to come to Indonesia. Now, I think we need to understand that two things. One is, what do Indonesians want from foreign investors? Right? Not just American investors, but foreign investors. And secondly, what do Americans want from Indonesia? American investors want from Indonesia. So let me just talk a little bit about that as a way of wrapping up. One is, what do Indonesians want from foreign investors, including American investors? One is this: we want them to appreciate our opportunities, right? Indonesians are very proud of the fact that we're now an emerging economy, $1 trillion economy, member of G20, large middle class, and so on and so on. You all know the numbers, and it is my job as Indonesian ambassador in the United States, and BKPM's job, just to spread this message out so people appreciate Indonesia's potentials. And I think all these investors know the score in terms of Indonesia's opportunities. Tom spoke very broadly about that. So that's done. Indonesians also want American investors to be long-term partners. You know, we had an experience with the Krismon in 1997-98, and that left an impression on us. We want you to stay permanently for the long term, in good times and in bad times. Third, Indonesians want American investors, as Mahendra stated, to provide us with quality investment, provide us with quality jobs that bring more benefits to our people. Indonesians also want us to profit together. We know that you must profit as you invest in Indonesia, and we also want to profit together. You profit, we profit, and we all win-win together. Fifth, Indonesians want to know more about the profile of U.S. investors. You know, how it is impacting them. There was a question that reflected that, and I think there are a lot of questions that are being asked, and perhaps this is just a communication issue, but we see today the gap between the impact and the deep presence of U.S. investments and the profile. So we need to make sure that we tell the stories as much as possible about how U.S. investors are impacting on Indonesian people. And next, Indonesians want U.S. investors to do it right, to invest in Indonesia in the right way. And again, this is something that, as Tom said earlier, American business have an advantage because they have very strict rules on anti-corruption and business ethics when they come invest in a different country. And I think this is a way that U.S. investors are quite different than other investors around the world. And lastly, Indonesians want a synergy between U.S. investments and our long-term plans. We have big plans with master plan for economic development. We want Indonesia to be the top 7 largest world economy in the coming decades, and so on and so on. And we see great opportunity for synergy between U.S. investments and Indonesia's long-term economic progress. So that's what we want to see from the American investors. And I think the last thing we should do is take them for granted. I think this is a theme that was inherent in today's talks. We at the embassy did some study internally. We questioned some U.S. investors about their perceptions on Indonesia. We found also some very interesting findings. We found, for example, when we asked them, if you were not investing in Indonesia, you had a problem, where would you go next? 26% said China, 24% said Malaysia, and 21% said Vietnam. Right? So we got to be, we got to know that they do have options. Capital does go to the place which is attractive to them. Capital is a coward, and capital goes to places where they can grow the best. Right? So we gotta not take them for granted. And it is also relevant in our survey that 29% of the business communities that we surveyed said Indonesia was a high-risk country for them, and 71% said Indonesia is a moderate risk for them. But the risk is seen as there, and the reason why they come is because they do see the potential for profit, and they're willing to take that risk. So don't take them for granted, and we have to understand what I think the United States investors want from Indonesia. Right? And again, I stand to be corrected on this. This is a personal observation. Based on my stay in the United States and being friends with Tom and Tammy and Edward and everybody. But several things for me. One is U.S. investors want to feel welcome and appreciated when they invest in Indonesia. I think one of our biggest challenge is that beyond this room, out there in the public and in the provinces, in the kabupatens, we need to begin to look at foreign investment, including U.S. investment, with less ideological eyes and more pragmatic attitude. We need to feel, the public needs to feel less defensive about foreign capital. This is the baggage from our ideological past. We need to feel less victim, and more beneficiaries. We need to feel less suspicious, and more opportunity driven. Let's feel that, hey, we've been had. There's a lot of that when you go to the provinces or the kabupaten. But I think on our part, the leaders and officials really need to educate the public that, look, the world has changed. Globalization has changed the game, and companies have changed. And how the impact on us have changed as well. What may be true 3 or 4 decades ago is not true today, and will change again tomorrow. So I think that's what we need to do in terms of our homework to make U.S. and foreign investors feel welcome. One of anecdotes that I want to share with you is there's a guy named Sehat Sutarja. Sehat Sutarja is the most celebrated Indonesian diaspora icon, a giant in Silicon Valley, an IT, his product is in your Blackberries and Samsung and everything. He controls 2/3 of semiconductors industry in the world. And because he's proud to be Indonesian, although he's a US citizen, once he wanted to come to Indonesia, right? And he says, I'm Indonesian, I want to put my money back in Indonesia. This is years back. And you know what happened? He wasn't welcome. he was just treated with suspicion. Well, why did you become American citizen? What do you want, man? And so on and so on. He wasn't given a feeling of being, welcome and given incentive. And what happens was there's a third country who said, hey, why don't you make your office in our country? We train you, we give you a subway station, we give you a great location, we give you this and that. And in the end, what? That's where he went, right? And he had every reason to want to go to Indonesia, being in an Indonesian diaspora, but he wasn't being felt welcome. So that's one thing that we need to take note of. Second thing that U.S. investors want is fairness. Now I say this because in U.S. national ethos, everything is about fairness. Fairness is just what the game is all about to them. And I think if you want to engage U.S. investors, you got to show that we can play the game of fairness as well. Now, my criticism of, my introspective criticism of our practice is sometimes di daerah, in kabupaten, in province, the moment they smell U.S. investors wanting to come to their place, mereka agak GR, and they begin to see the U.S. investors as sapi perahan. Right? I'll let somebody else explain what that means to the Americans. I don't know how to explain it in English, but you know what I mean, yeah? Instead of seeing them as a source of capital and partner for progress, they see them as sapi perahan dulu, So the game becomes different, there's a lot of back and forth, things become more difficult, and Americans feel, hey, we're not being treated fairly, right? And this is where they start thinking of China, Vietnam, and Malaysia, and Bangladesh, and other places. So fairness is going to be very important. Third, American investors want predictability. And I admit to you, and I should tell you, the news last night about the head of Constitutional Court being nabbed by the Corruption Commission, that is being noticed outside Indonesia. That reinforced the perception that in Indonesia, in many instances, or in some instances, the law can be bought and policies can be bought. I tell you, the Americans will not say it to you, foreign investors will not say it to you openly, but I say it to you as Indonesia's ambassador who listens to them, that these perceptions are there. These perceptions are there that the law can be bought, that policies can be bought, and there are cases in court that reflect this. We have to be sensitive to this, right? We can't just say, come in, and meanwhile we're not sensitive to these perceptions. Predictability means what to Americans and to foreign investors? It means that when you put your signature in a contract, that is a seal of honor, right? It's not something that you say, hey, we signed it now, and then let's see how it goes in a year or two, when we make more profit, then maybe something else need to be changed. No. A signature means it's a seal of honor. And I believe it's not just an American ethos, it's an Indonesian ethos as well. And the reason why they want this predictability is because they got long-term business plans. They got plans for 5, 10, 20 years, and they want no disruption or as little disruption as possible in how they execute this business plans. This is what I want to share to you. You have to understand how Americans think if you want to keep that 61 billion over the next 3 to 5 years coming into Indonesia. And I know there are issues. I know there are issues that you have. And I tell you how to deal with Americans. And I know this because, I went to high school in America and I'm ambassador to the United States. Just talk to them. Don't scream, you don't need to go in the streets. Talk to them. Put them in a room. Americans like it straight. They call it shoot from the hip. Right? Sit down with them, talk to them, be reasonable to them, right? Be tough to them. Americans like it rough. Wrestling is a great sport in America. But talk to them, be tough to them, negotiate and get what you want, but be fair with them. Be fair. Fairness is the key to how you get things out of the American investors. And I do predict that there's one little bit cultural friction or clash, which is Americans have this ATM mentality. What does that mean? America is a society where things happen fast. ATM means you push buttons and get the money, right? Indonesians are a lot slower. right? Slower, and sometimes we're a lot slower, sometimes we're a little slow. And I know this because I work for government. Our corporate culture is not fast, right? American corporate culture is fast, right? So we need to find a way to adjust the tempo, between the two. Americans need to be used to, things a bit slow, and Indonesians need to get used to things a bit faster. But I think what the bottom line I want to say to you is that both of us have to earn this partnership. We got big plans for Indonesia, right? Americans have this pivot policy where they say the future of the world is in Asia. And if they look at Asia, they no longer look at just China and India and Japan. They look at Indonesia as well. It's a tremendous historic opportunity for us to grow economically and to be relevant in the region and in the world. So we have to earn this partnership, not just geopolitical, political, but also economic partnership. And Americans also have to earn this partnership. I think they're trying hard, and there's still a lot of room for us to learn how to partner with one another. But my closing sentence is that if you look at what the Americans are saying and what Indonesian comments are saying, Pak Pujo is saying, everybody is saying, we really want the same thing for Indonesia, right? And this is something that I've been saying on my talk in the last week or two around the country, and it resonates well with the people as well. What does that mean? We all want Indonesia to be easier, cheaper, faster, better. Easier, cheaper, faster, better. I'll stop there. Thank you very much.
Once again, I would like to give our thanks to all of you for coming to this event. Hopefully today's report will give insightful knowledge in supporting Indonesian economy growth and U.S. investment. Have a great day, and please enjoy the lunch that has been provided on the back side of the room. For a photo session, now I would like to invite to the stage Indonesian Ambassador, Mr. Dino.
Iya, familiar. Saya tuh kalau saya wajah, kalau wajah saya ingat biasanya.